Hello and welcome to Policy Watch. This week we focus on the CSO's revised growth projection for the current year. That and other stories as well. But before we get to that, here are the headlines for this week. Budget 2013 preparations in full swing, expectations abound as Chidambaram promises a balanced budget. Government to give excise and custom duties a relook to facilitate GST rollout. CSO revises GDP growth forecast to 5%. Finman says number below expectations. And the US government files a lawsuit against Standard & Poor's for defrauding taxpayers, claims $5 billion in damages. Those were the headlines this week. And my guest this week is Jayant Chaudhry, senior editor with the Telegraph. Welcome back to the show, Jayant. It's good to have you back on the show. We'll get to our first story right away. Now, the Indian economy will grow at a dismal 5% in the current financial year. The advanced estimates by the Central Statistical Organisation shows poor performance by manufacturing, agriculture and services, leading to the worst growth figure in 10 years. The Finance Ministry termed the estimates as below expectations and said the government will continue efforts to boost growth.
It could not have come at a worse time for Finance Minister P. Chidambaram and his team as they give final touches to the union budget. The CSO figure of 5% growth in 2012-2013 is lower than its earlier estimates, as also the figures released by the RBI. All sectors of the economy are expected to grow at much slower pace than expected. CSO's estimates lowered growth in agriculture and allied activities to 1.8% in 2012-13, compared with 3.6% in 2011-12. Manufacturing growth is expected to drop to 1.9% from 2.7% last year. The crucial services sector is likely to grow at 8.6% as against 11.7% last fiscal. Last year's union budget had projected 7.6% growth for the current year. The Finance Ministry termed the estimates as below expectations. In a statement, the ministry said, "We are keeping a watch on the situation. We have taken and we will continue to take appropriate measures to revive growth." The ministry, however, expects the final numbers to be better as indicators are showing an uptrend since November.
आज जो संकेत आए हैं कि हिंदुस्तान के विकास की दर 5% हो गई है, होने की संभावना है। ये 10 साल का सबसे कम विकास दर होने की आशंका है। इसका उत्तर दीजिए। महंगाई से परेशान है जनता, करप्शन से परेशान है जनता।
घरेलू जो मांग है वो अगर बढ़ाने का रास्ता लेते और जो लोग जिसके कमाई उसके ऊपर जो चोट पहुंचा है उसको सुधारने का दिशा में अगर हम काम करते तो ये संभव था, लेकिन सरकार उसके लिए तैयार नहीं है।
The CSO projection for the year is the worst since 2002-2003, when the GDP grew just 4%. Since then, the Indian economy has been expanding at over 6%, the highest rate being 9.6% in 2006-07. Post the 2008 global recession, GDP numbers plunged to 6.9% in the last fiscal. The CSO figures hardly come as a surprise for India watchers. Persistently high inflation and resultant high interest rates seem to have affected the country's growth potential. Economists and policymakers agree that the economy may not be able to clock growth rates above 6% in the current scenario. Bureau Report, Rajya Sabha TV.
There you go. Jen, 5% growth, they're saying, the CSO is saying, the government has come out with this figure. There's been lots of revisions this year. First, the Planning Commission came out, said 5.4% and 5.7%. Now it's gone to 5%. Manufacturing and services seem to be the main culprits here, even agriculture to some extent. Economists say this could be bad news for investments as well, which have sort of picked up in recent months. What's your reading of the situation? How do you see this revised projection now?
Well, frankly speaking, of course, the Finance Ministry yesterday also came out and said that it's probably going to be re-revised again and it'll be much higher, probably nearer 5.5%. Well, there is a possibility it will be higher than 5%, undoubtedly. You are basically basing this on, one, the third quarter projection that it would probably be third quarter growth would be 4.2% or so. And the fourth quarter, your guess estimating would probably be 5. Possibly the third quarter might have been slightly more, maybe 4.5 or 4.6. And in that case, the fourth quarter might be actually a little more than 5% or so.
Right.
Which would give a little better scope, 5.2, 5.3, maybe 5.4 if you have really, really done well. But that is not really much to talk about. You're quibbling about 0.1, 0.2, 0.4.
It's nothing to write home about.
Nothing much to write home about. Yeah. What it is, I mean, your reporter was going on saying that it's bad news for Chidambaram. Maybe it is actually good news for Chidambaram.
How come? How so?
Why I would say is because right now, with elections just about a year ahead, you have a lot of pressure on Chidambaram and on Dr. Manmohan Singh to give a very populist budget. Give more subsidies. Give lots of tax breaks. Don't bother about fiscal deficit. Just go ahead and spend. That's what their colleagues are saying in the cabinet as well as in the political party, that is the Congress party. Now, they have to, as you said, Chidambaram wants a balanced budget.
Right.
He wants a budget where he will give some tax break, not much, and he will increase duties somewhere, and he will try to curb expenditure. He wants to cut defense expenditure, which has been a holy cow for a long, long time.
And his cabinet colleague is not very happy.
Absolutely not happy. They want to cut red tape. Nobody is happy about this. But this figure he could use to tell his cabinet colleagues, India is in dire straits. We need to take tough decisions now, especially because you have someone knocking on your prime ministership.
Absolutely.
The BJP has virtually said that this guy is going to be our candidate for prime minister, and he comes to Delhi, gives a lecture in the Shri Ram College of Commerce where he's talking about a development model and speaks about speed and speed of delivery, etc. They have to answer back. They have to cut red tape. They have to take decisions. So that is where he might actually be held by the numbers.
Right. It's a very interesting point you raise, and I'd like to speak a little bit more about that, but not on this show, perhaps after this show. Getting back to the topic, economists that I've talked to also say that this particular revision at 5%, even though you say the numbers can be revised, and since the November number comes in, and this is only till December last year.
Really?
The numbers after that might just get revised. But economists seem to think that perhaps the rupee might get impacted in the short term. Do you agree with that?
Well, it depends upon what kind of inflows come in, really. Rupee is dependent upon our trade flows and our stock market inflows. So right now the stock market is bullish. If you have the right kind of measures in the budget, then the stock market will actually attract more inflows. So the rupee might strengthen. Where is it that we are spending money? We are spending money on oil, we are spending money on gold, and we are spending money, of course, on a lot of imports, including of defense goods. Now, if you cut your defense budget slightly, that's bad. If oil imports, you really cannot do much about it. Yes, you reduce the subsidies, some amount of oil usage in India will reduce, but that's not much. That's not really speaking much. It's the gold imports which you really want to impact. One, you have already taken a decision. You have raised gold import prices. Second, you want to release the gold which is there hoarded by Indians through various measures. Now let's see what the government does, what it does in the budget. If it does manage to get some of that gold out, not all of it, just some of it, then we would have reduced that gold import bill from $58 billion last year maybe to $40 billion, and that helps the rupee bounce back.
Absolutely. Now, the finance ministry has termed these numbers as below expectations. We heard in the report as well, the reporter was saying that even though they think it's below expectation, they think that they've said that they're keeping a watch on the situation, they'll take appropriate measures on it, and they also seem to think that this is not going to impact in the longer run, and like you said, it could perhaps help also. I was talking to an expert the other day on one of my other shows, and she was of the opinion that there will be an impact in the short term, but it will not be a huge setback. Do you agree with that, and why?
Yeah, I agree. That's what I said. I mean, basically, it's not something which is people are worried about so much. The rupee, as we said, would in the longer run, if you can constrain your imports, it will actually bounce back. And if you can improve your exports, nothing like it. Stock market is a major reason why your rupee fluctuates from 53 to 55 and vice versa. Again, secondly, the people who are investors in India are not bothered about the short-term 5% or 6%. They're bothered about the long-term impact. They know that India is a steady market. They know it's a growing market.
It's a huge market for any
It's a huge market. I mean, look at the way Starbucks just opened, and look at the huge queue outside Starbucks.
Absolutely.
I mean, just to drink a cup of coffee, people are lining up. So there is a market and there is a huge potential for it. People are going to invest. I have no doubts about it. We have to cut down the red tape. That's all. IKEA wants to invest, and then we talk about quibble about whether they will be allowed only to sell furniture or furniture and
Set up
furniture.
a cafeteria.
Or set up a cafeteria.
That is
What's
just ridiculous
wrong?
in my reading. Anyway, last question on this particular one. So what you're saying, let me get this. Let me sum it up. So you're saying that even though the revised projection is 5%, it might just be revised. The numbers might be revised when the numbers post-December come in. And the government seems to think that there will be an uptick as well there as well. So nothing major to worry about. Slight impact, but nothing major to worry about.
Yeah, the government is basing it on two things. One, their service tax has gone up. Their union excise duty has gone up. It's gone up by 16%, service tax by 33%. The third is that the PMI, the Purchasing Managers Index, has gone up since October. Now, yes, of course, January, manufacturing PMI was lowest in the quarter in which January falls. But that doesn't mean much. Service sector PMI was actually at its highest in 12 months. So now you have a situation where probably, because Purchase Managers Index is basically an index compilation of what the purchasing managers want to buy.
Right.
So if you're going to buy more for your company, which means you're going to invest more, you're going to manufacture more,
Right.
you're going to hire more. So that's good figures for the government.
Right.
That's good figure for the economy as a whole.
Absolutely. On that note, we'll take a small break. We'll come back with a second story on Policy Watch this week. Don't go anywhere. Lots more to come with Jayant Chaudhry on this week's Policy Watch. Stay tuned. Welcome back. The US Department of Justice, or DOJ, announced on Tuesday that it will file a civil lawsuit against credit rating agency Standard & Poor's (S&P) for defrauding investors in mortgage-backed securities in the years leading up to the financial crisis. The lawsuit alleges that investors, many of them federally insured financial institutions, lost more than $5 billion in connection with the failure of sophisticated financial products known as residential mortgage-backed securities, or RMBS, and collateralized debt obligations, or CDOs, rated by S&P from March to October 2007. Now, this has been a huge story all over the world, in fact, more so in the US because S&P is the biggest rating agency there. There is this view, especially if you look at the Washington Post or other papers or the print media in the US, there's this view that the crisis would never have happened without these credit rating agencies, especially S&P, giving stellar ratings to toxic mortgage securities that really inflated the bubble then, back in the subprime crisis had hit. Do you share that view? What's your reading? I mean, your thoughts on the line that the Justice Department is taking?
Well, it's a rating agency, first of all. I mean, ratings are subjective. So we have to say that as a kind of caveat in the very beginning. But that said, it's a fact that these were toxic bonds. What you did was you took some good mortgages and you took some very, very bad mortgages, which you knew would certainly fail. You mixed them up and created one bond with it in the hope that the overall bond will not fail. And then you rated it. When you rated it, you seem to have given more weightage to the good ones and much less weightage to the bad ones, which were real bad apples. But what happened in the end of the day was the whole box got impacted. Every single apple had a little worm in it. And your rating crashed.
Absolutely.
The product crashed, your rating obviously was a failure.
Led to the subprime crisis.
Now let's look at what S&P has been doing. All along, S&P used to rate us as junk for a long, long time. And India was actually growing at a fast rate at that time. Whenever S&P would give us a junk rating, yet we would attract a lot of investment and yet we would go on. Now this has been happening for a long time.
So we did well, I mean, despite their
rating. Now, the interesting point is last year, when we were put on various kind of rating watches, we were at par with Tunisia as far as our creditworthiness was concerned. India was at par with Tunisia, a country which has grown by around 9% over the last 1 decade or so. Even despite huge economic recession worldwide, we were growing at more than 6%. We had a strong market. Our debt to GDP ratio was much, much healthier than most countries in the world. Yet we were being rated at par with a country which has just come out of huge civil war, where growth is almost near zero.
Next to zero,
So you just can't compare these two. Yet they were doing it. What the finance ministry had done last year was to go to these rating agencies and tell them, look, we are better off than these guys. How can you rate us at par? Improve our rating. Instead of that, they found some loopholes and said, you actually haven't done much, you should have done X, Y, Z, and therefore, since you haven't done it, we're going to put you on watch and might reduce your ratings next year if you do not do X, Y, Z, A, B, C, D. Now that is obviously one kind of, you could say, a kind of rating dictatorship. And you are trying to do what IMF did in the 1990s. You were trying to dictate to sovereign governments that you follow the policy prescriptions that we feel are correct, and otherwise
We'll junk your status.
we'll junk your status.
Right.
Now, IMF had done a lot of this in 1990s, and that was the time when you had the Asian crisis.
Right.
IMF used to call the Asian tigers, the Far East Asian economies like Korea to be the best rated countries, huge growth potential, and suddenly they slipped.
Look
They were
what-
nowhere.
What happened to Japan? They went to
Japan,
yeah.
they went into a tailspin.
Yeah,
Now,
absolutely.
India was one country which IMF used to tell, World Bank IMF used to tell every year that you must make your rupee fully convertible. And we kept saying that this is not the time for it. We need to take more measures before we can do it. And you had these economies which went in for full convertibility, and after that, zap, suddenly you had this fall. So we, India, actually then later onwards, of course, this duo of these bankers kept telling us, no, you did the right thing, we will tell the same thing to others. So there is something called hindsight.
Right.
But yes, economics is not a perfect science. People do make mistakes.
It's not. In the wake of, if I could call it a drama being played out in the United States, do you think India should also take steps to make rating firms more accountable? There is this view that India really should. What do you think?
Yes, it should, but not at this point of time. We have to get our house in order.
Order first,
We have to first show that we are growing at a faster pace. Poverty has really shrunk much more. Once we are stronger, we should tell them that, look, this is where you stand, and this is where we stand. You better get your act together better, otherwise we won't let you rate us.
Absolutely. One more question that I would like to ask you before I come to the SEBI bit of it. They have taken some small steps. I want to discuss it in just a bit. But it seems that the entire ratings industry, so-called Fitch and Moody and S&Ps and others, they reaped profits during their boom years, no doubt about it. There is this feeling in the US that they were going to escape unrepentant and unpunished until now, till the Justice Department took steps. Do you subscribe to the idea, Jayant, that they should be held accountable? One, yes. Two, that what they did was intentional, which is what the Justice Department is saying. Do you think, yes, they bungled up the ratings, everyone knows that, they screwed it up big time, but did they do it intentionally is the question.
No, that is of course something, yes, they bungled up. That's but clear. Everybody understands that. Did they do it intentionally? Was it intentional?
It's a big question mark.
That's a big question mark. You have to prove malfeasance, that yes, someone was actually benefiting or profiting from it. Well, if the Justice Department can do it, then obviously there's a case. Otherwise, from here, several thousand kilometers away, we really can't say. There are, of course, all these horror stories and accusations which developing countries do make, that the rating agencies are biased against them for various reasons. There's some politics behind it. But then they are there. Those rating agencies are what you depend upon to sell your bonds. You have to depend upon them.
Absolutely.
Till you can prove otherwise, you have to take them at their face value.
There's been a small step taken by SEBI in India, and that's basically, they've said that a credit rating agency cannot offer any fee-based services other than credit ratings and research to its rated clients, while its regulations would apply to ratings of all kinds of securities, bank facilities, and services. Do you think that's a good step?
I think it's a good step, because at one time, ratings, there was this talk that ratings can actually be bought. I do not know whether they were ever bought or not, but many corporates seem to think that they could be bought. So therefore, if SEBI is getting a little more stricter, it had got stricter in between also, in the late 1990s also. So if it is taking some steps, I think it's proactive, it's good, and it will clean up the act much more. I think more or less ratings in India are fair.
Right, absolutely. Another small break right now, Jay. We'll come back with a third story. One more story coming up on the other side of this break. Keep watching Policy Watch. Welcome back to Policy Watch. Faced with the daunting task of balancing the budget and getting the economy on track, P. Chidambaram shoulders great expectations from a lot of quarters on his shoulders. In the run-up to the budget this year, Policy Watch brings you a series of special stories related to Budget 2013. Here's the first one in this series. Rolling out the Goods and Services Tax, the GST, the Finance Minister has admitted is one of his top priorities in the remainder of this term. We filed a story on how the government wants to have a relook at customs and excise duties. Take a look.
The Finance Ministry is expected to take a fresh look at exemptions in excise duty and service tax this budget to prepare the ground for the rollout of goods and service tax (GST) by December this year. The government is keen to begin this process of rationalization in the budget itself, but the final decision is expected to be taken at the highest political level. If implemented, packaged food items such as sweetmeats, edible preparations like namkeens, smoked fish, sausages, olives, cheese, butter, noodles, ketchup will become more expensive. Mobile handsets, hands-free devices, memory cards could also become costlier with the proposed duty structure rationalization. A while back, the government had proposed 16% GST with 8% central GST and 8% state GST to replace indirect taxes levied on goods. The Vijay Kelar panel, in its report on fiscal consolidation, has advocated for a cut in the median rate to 8%, signalling a shift towards GST. However, Finance Ministry officials are in favour of retaining the median rate at 12% for now, as the government is keen to send out strong message about its commitment to fiscal consolidation. Most industry lobby groups, including CII and FICCI, have demanded that if the government can't cut taxes, then it should at least retain rates. The government has cut the median excise duty rate levied at nearly 90% of goods manufactured to 10% from 14% in December 2008, and by another 2 percentage points to 8% in the interim budget in February 2009.
There you go. Jayant, two things. One, like my report just said, that the government, the Vijay Kelkar panel had said, go back to the median rate of 8%. One, is that a good idea? Two, the report also mentioned that essential items, people, the middle class that, they use these items are like namkeen, cheese, butter, mobile handsets. They're going to get more expensive if it is actually implemented. The middle class is not going to like that.
I think ultimately the government will do it at some stage when they are comfortable with it. But this is, after all, a pre-election year. I doubt if the government is going to raise taxes which impact a lot of people in a year just before elections. It will be not only be unpopular.
And mind you, it's just in a considering stage right now.
Consideration stage. The whole consideration is how much money can you garner from these measures and what is going to be the real political fallout of it. So when they weigh these two, if they feel that the money amount which is going to come out from this is not that big, then they will probably not go in for this increase. Yes, it is an ideal which they would like to do, which is what whether Kelkar or Parthasarathi Som, that is what they have been advising the government, but then there is politics. And then there is also what the people want. After all, if you remember, Chidambaram used to quote something from a Tamil poet, which used to say, basically, it's the job of the tax collector to be like the honeybee. He has to collect money, like honey, without actually hurting the flower.
Absolutely.
So that's got his...
That's a very good analogy, Jayant, and I'll end the show on that analogy, of course. Jayant Chaudhry, many thanks for joining us on Policy Watch this week. That, of course, was the senior editor at the Telegraph, Mr. Jayant Chaudhry, joining us for Policy Watch. Our first story this week on Policy Watch was the CSO revising GDP growth forecast of 5%. Now, the Finance Ministry says it is below expectations, but my guess, and other people, of course, economists, they say that this could have a small impact in the short term, but really nothing much to worry about, because these numbers are just till December. Other numbers will come in, and there is an uptrend that we see, and the government also sees. So there is really nothing much to worry about on that front. It perhaps could go up to 5.5%, 5.4%. We'll have to wait and watch when the final numbers come in. The second story on Policy Watch this week was a huge story all over the world. S&P, Standard & Poor's, is getting sued by the Department of Justice in the United States. The DOJ claims that they intentionally defrauded taxpayers by giving stellar ratings to toxic mortgage securities. Now that, of course, had to come. They did, of course, Justice Department says they did, in fact, trigger that crisis back then. We'll have to wait and watch whether really S&P gets into a lot of trouble or not. They've hired the best lawyers, just to tell you, in the land to actually defend them. Watch this space for more on that. Our third story this week on Policy Watch, of course, was the story that came out in some media reports the other day saying that the government might take a fresh look, a relook at customs and excise duties. My guests seem to think that there is, of course, economics, there is, of course, the economy, and then there is politics. It remains to be seen whether or not Mr. Chidambaram and his team of people will actually take that huge step, because remember, it is 1 year till the general election in 2014. That's all the time we have on Policy Watch this week. Till next week, Athar Khan saying goodbye, good night, and thank you for watching.